Welcome back, guys, to another episode, Invest in Your Future. I'm your host, Kenny, CEO of Corona Group Corporation. I want to thank you guys for joining me for another episode. We're here every Thursday to help you guys with business, entrepreneurship, credit, real estate. And we just always try to bring on people also that are doing kind of big things for themselves, also doing big things for the community. But I want to thank you guys for obviously commenting, likes, all the subscriptions, all the thumbs up. We appreciate that. If you guys have any questions or comments, please leave them wherever you listen to this, whether that's on Facebook, whether that's on Instagram, whether that's on Zoom, or wherever you listen to this, on the podcast, on iTunes, on Stitcher. If you hear from there, please give us a thumbs up or give us a like or give us a 5-star rating. We always want to interact with our audience. So I always want to kind of talk to people. And if they always have questions, I always want to make sure I'm available for them. So that's why I always give guys options on different platforms to be able to contact me. So guys, if you have questions or comments, please leave them wherever you listen to this. Today, I want to bring on a special guest, a good friend of mine named Harry Delani. He works at Advisors Capital Management. He's also a financial wizard himself. He's done some great things for himself. He's in real estate. He's done some stocks. He's done some bonds. He's done a lot of things. And I wanted to bring him on here because I met him on the basketball court. And I found out this guy's doing almost the same thing I'm doing, which is just trying to help people, but then also doing things for himself to make sure he's secure in terms of financially, in terms of his family, making sure he's settled. So I want to bring him on here. Harry, you want to say hi to the audience?
Hey, thank you, Kenny. Thanks for having me. Again, I'm Harry Delani. I'm a financial advisor with Advisors Capital Management, but also I think a real estate investor and a little bit of an entrepreneur. So I would like to share a little bit about myself and my story and see if I can help give anyone any ideas.
Well, thank you, man. Appreciate you coming on. So first of all, I just want to ask, give us a little bit about your background in terms of education so we know where you're coming from.
Maybe it's a little bit like the Robert Kiyosaki. I'm a bit of a C student. I grew up in Stoneham, grew up in more of a public housing setting, so I was not very well off. My mom didn't graduate high school. She was a waitress when she worked. Didn't have things handed to me for sure, which is, I think, part of why I worked so hard. But as a student, I went to Stoneham High. Not one time brought a book home. Got C's my senior year. I had no thought of going on to college. After I graduated, I worked for a year in warehouses and temp jobs, probably making, I don't know. It was 1995, so I don't know if it was $12 an hour. $10 an hour, I have no idea. But I remember thinking, if I could just make $18 an hour, I'd really be living. But I got lucky. I had an aunt of mine, had a son a year younger than me, and he was applying to colleges. She sat me down and basically gave me a smack and said, Harry, you're a little bit too smart to be, working around in warehouses and doing odd jobs. She made me apply to some schools. I actually only applied to one, Salem State. I went to Salem State for a year, just doing general introductory courses. Managed to learn how to study, get some A's and B's. After my freshman year there, I applied to maybe 3 or 4 different colleges, and I ended up going to University of Massachusetts and studied there, got my bachelor's there. So, that's kind of how I got myself at least educated to a certain degree.
Nice. What was your bachelor's in?
I actually studied kinesiology, which has nothing to do with anything I do today.
I think that's the uniform. Everyone goes to school and they do something totally different.
I had dreams of wanting to be a doctor, so I figured I'd hit all my core requirements. But once I got out, I really didn't feel like going back for that long.
Nice. Well, listen, you went to school for kinesiology for pretty much exercise science, and you're now in finance. So talk about how that switched. Where did you go, and is there anything specific that you remember that switched you over to finance and investing?
Yeah, after I graduated, I just needed to work. I took a job with Fidelity Investments, kind of got my introductory to finances there. I took the Series 7 and the different license programs to be a broker. But it did give me a good background on investing and learning to kind of grow money for the future. I was super green. I didn't know, I knew nothing about economics, finances. So I was pretty much a blank slate for them to refine me into, a Fidelity advisor.
Wow. So you switched over and got your license. Worked at Fidelity for a little bit. Let's talk about your first investment. What was your first amount in terms of investment, and what was your first official investment you considered yourself?
Well, I don't know if the 401k counts. It was pretty plain vanilla.
Sure.
But I did start saving in the 401k at Fidelity very early, which was beat into you once you work there because they're so generous in that plan. Mm-hmm. So it was really with that, but nothing very sexy. I wasn't making enough money to to really dive in. My first real investments were probably real estate.
Nice, nice. And could you expand on that? What was your first?
The first deal in real estate actually was prior to the bust, so it was probably like 2004 or 5.
Mm-hmm.
It was in Lowell, Massachusetts. I bought a bank-owned condo. Actually, I don't know if it was bank-owned or not now. I bought a condo, I know, but it was super cheap, not the best neighborhood, needed some work. So I went in and I, did the painting and the general light rehab to it just so I could move in and live there. Made it, habitable for me anyway. And then I sold that in maybe 2006, 2007, right before the bubble burst. So I think I probably paid $60,000. I sold it for about $115,000. Wow. I thought I was a superstar.
Wow, you bought it for 60 and sold for 115.
Yeah, something like that.
That's in a period of how long?
I probably owned that about a year.
Wow. So. In that one deal, you made over 50.
Yeah, I made over 50, and to me at that point, that was like all the money in the world. So it felt pretty good for sure.
I think everyone remembers that first time they got a good chunk of change. I remember myself, but Harry got that first deal and got his beak wet with 50,000, and I think this is where your life changed. Would you say, Harry, this is when your life changed?
I didn't know it yet, actually, because after that, the boom, I bought another condo maybe another year and a half later, which I overpaid for. The good thing is I didn't put a lot of money into it. I put a small amount down and left the other assets for me to, have liquid. But I probably paid 110 for a little garden condo in North Chelmsford. And that was probably, after a year or two, was probably only worth 70 or 80, right? Because it was 2008, 2009, and the floor fell right out from under us. So it wasn't all rainbows and sunshine after the first one.
Well, of course, you got to have some bruises, man. It's the name of the game. But okay, so that second deal you overpaid, which I think everyone's overpaid before. Trust me, Harry, you're not the only one. I've overpaid multiple times, matter of fact. But and then for you, you were kind of realizing the real estate was going to be the path that you wanted to take, right?
I think it didn't happen right away. Still, that was 2007, 2008. I was still working at Fidelity, started to make some more money. And as the market continued to tank, say through, March of 2009, I was saving my money, living kind of lean, and investing in my 401k, doing all the stuff that you're supposed to do. But I wasn't investing my cash, so I was keeping that on the sidelines. Whether that was right or wrong, in hindsight, probably should have bought Apple or Amazon or Google. I'd probably still have more money today. But I think I was holding it out for real estate because, I had the success with the first deal. I liked owning something that I could hold on to, and I felt like was a little bit more of an asset than just stocks and bonds and those type of investments that you feel like can just wipe right out from under you in a minute, right?
I have some stocks too, but I don't take it serious also. Then what would you say? Because now you're moving up, you're making some steps here and there. It's around the bad time right now of real estate, right? Would you say?
Right. Yeah. I bought a 2-family in Stoneham in 2010. That was probably my next purchase. It was right next to my father's house, which was a 2-family in Stoneham. I had done work to it with my father, who was a contractor, years before. So I kind of knew the house. I knew a lot of good work was done to it. It was selling what I thought was fairly cheap at the time. Kind of jumped in and made my first real investment that was not, just a little condo or smaller thing I was going to live in. So my first investment, I wasn't going to live in.
So in that one, would you say that was a good deal or bad deal?
It was probably average. I probably slightly overpaid. If I had to think back, I would probably have bought something bigger at the time. If I would have bought a 2 or a 3-family. I had enough money to put down at the time, but I dipped my toe in, probably being a little bit conservative, but it worked out fine. That house is worth probably double what I paid for it. I only put down, 40, 50,000. So I did okay.
You still own that one, right?
I still own it. Yeah.
You own that one. Yeah.
It's on the chopping block though.
Wow. Well, listen, I know obviously long-term is the best bet for everybody. I'm talking about anybody who wants to buy real estate. Long-term is always the best play, but sometimes you do have to make those flips and try to get some cash or, find a way to get some capital behind you, which you might have to sell some stuff. But every real estate investor would love to hold everything forever. Would you say the same thing?
It's same goes for stocks, same goes for real estate. I'd buy and hold everything if I could all the time, but it requires some liquidity to keep laddering up and buy bigger stuff.
Bigger stuff, exactly. Yeah. Now, I mean, you told me some of the small deals now, but now tell me about one of your best deals that you've had so far as a real estate investor right now.
My best deal, is without a question. I bought a condo in the South End of Boston, probably 2012, right when everything was going bank. Everything was bank owned, short sale. What people, I think a lot of people don't remember is that the stock market bottomed in March of 2009, but real estate really lagged behind because people had to be foreclosed. They had to start, people started to lose their jobs and they were in houses they couldn't afford. A lot of that stuff didn't hit the market until 2011, 2012, even strung out probably to 2013. So the condo I bought in the South End was about 13 or 1400 square feet, 80 feet long, had the height of a basketball. It was 20 feet high in ceilings. It was 440,000 and had a parking spot underground. And I remember thinking, there's no way I can afford this. And I'm not even sure if it's worth it. Thinking, I mean, it's in the South End. It was an up and coming neighborhood, but it wasn't what it is today. There's still some rough spots around it too. So, I mean, it was not a slam dunk as it seems like it should have been, but I wanted it bad enough that I pulled the trigger. But it felt like for me that out of any deal that I had was the most questionable. Harry, you probably shouldn't do this, but I did. So the one I think thing that turned me on to it the most was there was a condo next door that had the same layout and they rehabbed the second floor in two spots to it. So they added about another 800 square feet. And I knew someday I could do that. If I held it long enough and saved enough bucks to rehab it, I'd, just add that and I'd have a win right there. I mean, anytime you can add 800 square feet in downtown Boston, it's a pretty big deal.
Oh, huge, huge.
But it still felt very difficult to pull the trigger, to be honest, looking back.
For those people who don't know, in Boston, South End right now is one of the most expensive areas in Boston. It's up there in terms of prices and size. If you can buy anywhere there, you're doing well. So Harry, tell us, did you end up holding that or did you end up flipping that one?
I ended up selling that, which I kind of regret, but I sold that about 2 or 3 years ago for $1.5 million.
Well, 1.5.
For 1.5, which was nice. But the thought of taking the difference of that home in a check was a pretty surreal experience. So it felt pretty good.
That's a nice win, Harry. So, I mean, you bought it for 440, you put in some money, and then you sold it for 1.5. You walked away with a check, but why did you sell? Could you tell us a little bit why?
Well, I knew I wasn't going to live there, number one. 2, it was brand new. I made it came out really nice. Top end kitchen, top end bathrooms. The thought of renting that out is a little questionable, I guess, but in hindsight, I would have rented it. I would have refinanced it, took 80% of the money out, not paid any taxes, kept owning that because that's never going anywhere but up anyway. And I would have laddered up with just a refi, I think. But it was nice to get the mortgage off my off my chest and not have to deal with a downtown renter. But in hindsight, I would have kept it looking back if I was thinking clearly.
Now that was a big deal. Now I know a lot of my audience can't afford those big deals, Harry. Some of these guys are just starting out. How can a guy, a normal Joe, maybe working 9 to 5, well, hopefully he has a 9 to 5 now, especially in the area we live in.
Sure.
How can a person start themselves in terms if they want to get into real estate and they want to, start maybe where you started with a condo or something like? I mean,
sure.
What advice would you give somebody on how to get started?
Yeah, I can definitely answer that. Before I do that, I'll just say my next 6 or 7 deals after I bought the 2-family in Stoneham were all bank-owned condos in Salem. So I was buying $100,000 condos in 2011 and 12 and 13 that probably sold for $380,000 in 2006 because they, at the height of the market. So I started super small. I probably could have went bigger even at that time, but just being a conservative investor, I started super small. I put down the minimums, that I could, the bank would allow me to. And I at that time, and I'm not sure how well this actually this does still work today, but maybe it's a little different, but you can still refinance those properties once they're worth a little more, take cash out. And that's really how I did it. I started with one sum of money. I didn't start with, 500,000 saved. I was starting with, first one was 100,000. I probably put 10,000 down. I bought it for 105. It was probably worth 140. I went in and painted it and refinanced it for 140. So I was taking 30,000 out. Basically, I had no money into it after, right?
You put down 10 and you refinance pull out 30,
Yes. Yeah, right. So if it was 110, I put down 10. I had a loan for 100. After the property matured a little bit, which means I was had someone in there renting it. I made it look a little nicer. I went back to the bank and refinanced it for more money. So the bank's probably said it was worth 180,000, and I took out a loan for 140 or 135. So I really bought the place, and the bank paid me money to own it. Now, how likely is to do something like that today? Probably not very. But I guess my point there is that starting small, and it does work too, right? So you got to take baby steps. You got to walk before you can run type of thing. But to answer your question, to get started now, you're working regular 9 to 5. I mean, it doesn't matter, I guess, how much you're earning. But, Kenny, for me, I think people have to be lendable. So you have to figure out a way to earn enough money, whether that got your 9 to 5 or you're making a set salary. You got to go out and hustle and do something else, right? Because if you're making $40,000 or $50,000, or even less than that, $30,000, whatever that amount is, it's very hard to, after paying all your bills, to accumulate money to put down on a property. For me, I think people will have to figure out a way to earn more. I can't really sugarcoat it. If you want to go buy a 2-family and it's $400,000 or $500,000, you have to figure out a way to, get a down payment. You don't need to have 20% down. Maybe it's 3 or 5. I know someone I'm talking to right now is buying a 2-family in Saugus for $480,000, and they're putting 5% down. Now, that's still a lot of money, but it's not money that you can save if you hustle. I think whatever your skill is or whatever you're doing for work, there's something else you can do to make extra money on the weekends or after you're done. You're gonna have to figure out a way to do it, and the bank's gonna have to know about it. So at some point you have to pay some taxes on it, because even though as much as it hurt to pay tax on money that you're getting on the side, if the bank doesn't know you're getting it or you can't prove to them, they don't care. So showing that you're lendable and showing that you're generating income, that's all the bank really cares about. Once you get a few deals under your belt, then you become a lot more lendable to the bank, or you have higher income.
Definitely, Harry. That is one of the biggest things I tell my audience all the time, is you have to be friendly with the banks, man. The banks are your friend. They provide capital. They actually provide more capital than you do. So in a sensible world, you would think that person is trying to help you. But the biggest thing I preach also is you have to show the bank that you can pay back the money that you lend. That's pretty much what credit is. Can they trust you with making payments every single month, on time, every time? That's why I preach, Harry. On time, every time. It doesn't matter what debt you have. You pay early or on time every time, and you'll be lendable to almost every bank. Now, Harry's doing real estate, so he's doing, larger down payments. But it comes down to even your regular credit card. If you have bad credit, you're not paying on time every time.
Right.
They're not going to increase your credit limit. They're going to most likely reduce it. So you have to be really wise and think, okay, what is my future plan? And okay, how much money am I going to borrow? So you need to be able to borrow that amount in the future. So you need to make sure you line yourself up by making payments and making sure you grow yourself in terms of credit wise. Harry, you obviously, as you said, you started from zero, started building yourself up. Now you work at Advisors Capital Management. Could you tell us a little bit about what you do now currently?
Sure. I mean, I guess my first career in what I do is I'm a financial advisor, a wealth advisor. Really what that is my role at Advisors Capital, I'm a regional vice president. What I do is I basically handle any client or any prospective client for my firm in New England. So I could handle clients in Connecticut, New Hampshire, Maine, Massachusetts. Leads and referrals come in. Essentially, I'm the guy that reaches out to the prospective client, kind of learn about their situation, what they're looking for from an advisor or investment manager, review what we do as a firm, and review how I can kind of dive into their details, dive into their situation, and make some changes to benefit them going forward, right? So I build them a financial plan, a retirement plan. I look at their estate plan, their taxes, and really just come up with any ideas and suggestions I can do to put them in a better place and to earn their business, right? As an advisor, I deal with probably higher end clientele, probably, minimal investable assets, $500,000. My average client probably invests a few $1 million with me. But yeah, really it's as simple as them sending me referrals. I get up to bat, try to knock it out of the park, sign them on as a client.
So that's what you do right now. I mean, he helps people pretty much with $500,000 plus in terms of net worth, right? Is that right, Harry?
Yeah, generally in investable assets. So I work with a lot of people who are 55 and above, they're getting close to that retirement or they're in retirement, looking to make sure that their assets are going to be able to support them throughout the rest of their lives, that they have enough growth to hedge against inflation, they have enough safety to protect against down markets like we're experiencing today. It's really just a, overall plan to make sure that they're successful no matter what happens.
Sure. I mean, it's pretty much, he helps you make the proper decision so you have a future in terms of wealth, pretty much, right, Harry?
Right. Yeah, exactly.
Exactly.
Yep.
Like you, if you're looking for ways to increase, obviously your wealth, and also get advice from a gentleman who's done very well for himself, Harry, I'll leave all the information on your contacts and stuff in the show notes, so don't
Sure.
worry about that. But also for myself personally, I mean, I'm asking now kind of a personal question. If I do for right now, because I am a real estate investor myself, what kind of advice would you give me right now? Let's say another person also is a real estate investor and they're looking at the market and they're seeing that everything is going down the drain in terms of people losing their jobs, which relates to people not paying their rent, which the rent that makes sure that when you can't pay your rent, the landlord can't pay his bank. I mean, what do you
Right.
see right now in the terms of the market right now for yourself, and what kind of advice would you give me?
Great question. But right now, I mean, from as far as from an investment in real estate, I'm putting things on hold. Unless the deal is a slam dunk, because I think deals could possibly get better. I mean, I'm not trying to predict the future. I don't know where the real estate market's going, but the real estate market will generally lag the stock market because it's not as liquid of an asset. What's going to happen to the overall economy is very questionable, depending on how long this drags out with the virus and when cases start to slow down and we, find a vaccine. But I'd be nervous to buy personally, because I think people still think that it's a month ago or 2 months ago, but we have a strong economy, of 11-year bull market, and they still think that their house, say you had two families with 600,000, the neighbor sold theirs for 3 months ago, they still think that theirs is worth 615. And to me, I'd say maybe it is, maybe it isn't, but I'm not paying it. That's just my opinion. I'm kind of a conservative investor anyway, and on that, I'd be glass half empty, I guess. I'd like to be a long term, I'm an optimist and a bull on any investment, but I wouldn't buy it. I wouldn't buy a deal right now unless I felt great about it. Right, it got a great price, had great tenants, great cash flow. I'm still looking at some. I doubt people are going to say yes to my offers. I mean, it's probably 10% chance. I have two offers out there right now, and I doubt either one will close. That's me trying to guess.
Sure, sure. Which makes perfect sense, Harry. I mean, I myself also I'm still looking at deals and I see the overpriced, so I'm just gonna wait. I mean, I have no
Right,
problem waiting. One thing that helped me, I think, is making sure that I'm not over leveraged. So a
right,
lot of people out there, I give advice: make sure you're not over leveraged. That's one thing that can kill you, especially in a downturn, because obviously your payments are high, but also you don't have any equity to refinance, like you said, Harry,
right.
right?
Yeah,
And
absolutely.
yeah, it's tough when you over leverage yourself. So try to put down as much as you can, but also be careful because I myself in real estate, I always plan like the worst case scenario.
Right,
Area. That's what I follow. So that way I make sure that I can't, I don't want, never want to lose a property. That's one guy I also give advice is never lose a property because it sets you back so much.
right.
You say, Harry?
Yeah,
Yeah. So I
it would
mean,
be a killer.
hmm?
It would be a killer
It'd
to
be
lose one,
it's
especially if you lost it to the bank. Couldn't
exactly
sell it. I mean, it would be a game changer. It's going to set you back, 7 years probably.
7 years, 7 years plus, I would say actually.
Sure.
Uh, so, I mean, that's a great point. Is just make sure right now in the market that we're in, Harry and myself just give advice and saying, listen, yes, you can still keep looking at deals. Yes, you could always be hunting because obviously, there's always deals out there. But make sure you first of all don't overpay, and second thing, obviously, make sure you get the right financing for it. Don't over get leverage in terms of paying high interest rates, and then also making sure there's going to cash flow. That's a huge thing Harry mentioned is he has to make sure they have cash flows to be able to service that debt. Otherwise, you will be drowning in debt, and it'll eat you
Right.
alive. It's that simple.
Yeah. I mean, the other thing on any multifamily investment is cash flow is not just paying your bills or expenses. I mean, it's making money.
Mhm.
If the property's not putting positive money in your pocket every month, you're essentially a slave to that property. And if you lost a tenant or had a vacancy, you're actually losing money. That's crazy. What type of investment is that? Unless there are reasons maybe that you think it's going to appreciate a lot in the next couple of years or 5 years, or it's in a great neighborhood, or there could be reasons why cash flow might not be the number one concern. But if you're looking to make money in multifamilies, cash flow is the number one thing.
Yeah,
It's not making $100 a month or 200. It's making sure that it really is cash flow.
exactly, exactly. I mean, great point, Harry. That's why he gets paid to give advice like this because this is stuff that helps a lot of people that a lot of people don't understand. Me and Harry are on the same page because we're in the same industry, so we understand these are the kind of things. And if this is high level for you, I mean, just do your research, learn a little bit more. Nothing wrong with it. But the biggest thing is we always want you to understand this is the level you need to get to when it comes to understanding cash flow, understanding credit, understanding real estate markets. Harry is especially, here in New England area. He's very seasoned here, but I'm out of state. I go to different states, Harry. I go to Pennsylvania, I go to Florida because I'm chasing cash flow and I'm chasing also a little bit of yield. So, any advice in terms of learning like how to be an entrepreneur and how to really grow yourself? Because myself, I just took big risks. That's the big thing for me, Harry.
Sure.
But for you, I mean, as a guy or someone out there who's trying to become a business owner or trying to become an entrepreneur, what advice would you give those guys?
Well, one master your craft, right? So whatever your craft is, be the best at it. Give great service, do great work, make sure that you build the biggest, strongest business you can. You have to go out there and work, right? And you got to take that chance, whatever that is you want to do, whether that's painting houses or it's running a retail shop. It doesn't really matter what the business is. You're gonna have to go out and bust your ass for it, right? You can't. It's not going to be given to you. I'm always trying new things, right? I have real estate income that pretty much gets me by. I mean, I went back to work to strengthen my spreadsheet. That's why I'm at Advisors Capital. I'm trying to build another income stream, but I'm working as hard as that as when I first started at Fidelity, 20 years ago. I'm out building a new practice, and I'm doing that for the long term, right? So, my goal when I'm done is to have income from real estate, investment management, and my stock investments, right, every month. So if I can have three-legged income, I'm not going to really care about if I lost my job tomorrow. I won't care if the real estate market's down next month or one of my tenants doesn't pay, right? That's a longer-term vision. I'm not even there yet, but I'm getting there, right? Every year it goes by, it gets stronger and stronger, but that's my vision. So I'm still working, trying new things. And I've started small businesses. I have a small junk removal business that I helped a friend of mine start. I get out there and do the jobs with them. I don't need to, but to figure out how to make that company profitable or to find leads and price jobs, I've been out there doing it. Mostly I just wanted to help them buy the trucks and get them started with the business formation. But it's a lot of work. I mean, I'm not 100% dedicated to that. That's got about 5% of my attention, but I'm still trying new things, I guess, is the point.
Great point, though, Harry. Great point. You cannot rely on one stream of income. And Harry, for those guys out there who's trying to be entrepreneurs and do business, you could take a very great lesson from Harry where he started one business, mastered his craft. That's a huge thing. I don't know if you guys picked that up. Master your craft, meaning you're going to become more valuable and make more money that way. Would you say the same thing, Harry?
Oh, absolutely.
Exactly.
I mean, I know no matter what happens, I can always go back to the investment management world, right? Where I'm working now with Advisors Capital. There's a dozen companies that would probably hire me in the next couple of months if I really need the work. So to be really comfortable or be able to have stuff on the back burner, you have to have skill sets and things that are, that can, basically you can sell yourself and make yourself money if you needed it.
It's huge. It's huge.
Yeah.
I mean, you have to have a skill. You have to have some kind of skill, and everyone does. And Harry uses a skill to produce income, takes that income, puts it in real estate, and now he's living a comfortable life. Actually, Harry, could you tell the audience where are you right now currently?
Yeah, sure. I'm up in Maine at a lake house, Freiburg, trying to avoid the apocalypse. So I'm doing it in solitude up on my second house. So
Harry's up in Maine, a distance away from everything. But no, Harry is definitely one of my good friends. And Harry, I appreciate you coming on. Just a couple more questions, and these are kind of like the fast five. What would you say right now? Is because obviously you're far, but so I kind of know what the answer is going to be. But what would you say your number one tool that you use for business right now that you can't live without?
Well, it's my phone.
Phone, right?
Zoom's getting up there, right? We're on Zoom. This is like my 10th time on Zoom in the last 2 days, and probably use it once a month before this. So Zoom's getting up there. For me right now, yeah, it's the phone. I'm calling all my clients. My clients are all losing money right now, but I'm not scared to call them, tell them they have a plan. They're going to be okay.
That's good. So the phone's number one. Another question here. What would you say your number one habit that you think has helped you become successful?
I'm a grinder, I think. I'm kind of always working and searching. So even when I was at Fidelity, early days, getting into real estate, I was always searching for real estate for new listings every day. I was going out after work. I was going out on the weekends. So I'd say I'm a grinder.
Right. It's a good habit to have, man. Good habit for you guys to pick up too. Be a grinder. Here's another third question here, Harry. What was the last book you read?
Oh Jesus! Do you want the truth?
Yeah, sure.
It's right up there. It's a Dean Koontz album. Wasn't very good though. I read it on an airplane ride from Minnesota.
Okay.
I can't even think of the name of it. It was easy reading.
All right. Another question here. Who is your number one mentor or role model, or somebody that that you follow, that you say you take your advice from? It could be anybody too.
Probably my dad. Just he's such a hard worker, right? He was a contractor, self-employed guy. So I'd say probably my father from work habit, and he wasn't the best entrepreneur, didn't run the most efficient business, but he worked damn hard and did great work. So
that's where you picked up the grinding habit, huh?
I picked up the grinding, but I tried to be a little more efficient.
Nice. Smart. Here, last couple of questions, Harry. If you can leave one piece of advice for your children, you can't leave them money, you can't leave them, your brain, anything. You just, what advice would you give somebody, who you can't leave anything else to except just this advice? What kind of advice would you leave?
I would tell them to master compound interest, probably, right? Just understand, get started early, understand the numbers and why it's so important. So.
Wow. That's actually, I'm going to write that one down. I need to teach my kids that one, man. Master compound interest. I don't know if you guys heard that. Harry here is a specialty man. He's a guy from Advisors Capital Management. He's done great things, first of all, for himself to get him from zero to wherever he is now. I mean, he's expanded. He's done deals in terms of flipping deals. He's done long-term deals. He's constantly improving and grinding. I mean, Harry's one of those guys that looks low-key, but he's really paddling hard and pushing himself. I mean, if I for myself, I'm going to get advice from Harry. I don't know about you guys, but I'm going to leave all his information in the show notes. Harry, first of all, I want to say thank you for the time, for the patience, and also for tuning in for Invest in Your Future. Obviously, you can reach out to me anytime you want to. But definitely, I want to say thank you, Harry, for coming on. I appreciate the information you gave us. Man, if you want to leave any more advice, please, the floor is yours.
No, I'm happy to help and be a part of the show. I really am always happy to help people learn. So if people have questions, I'd be happy to answer them. So I'm available. But no, I appreciate your time, Kenny. Sure. And we'll talk soon.
Sure. What you want to leave your information, your Twitter, your Facebook, your email or phone number, or whatever you want to leave? Go ahead.
I'll leave my phone number, I guess. 781-572-1052.
Okay.
And shoot me a text or give me a buzz. I'd be happy to answer any questions.
Wow. Great, Harry. Great, man. Thank you, man. Thank you very much. Guys, thank you guys for tuning in for another episode of Invest in Your Future. We're here every Thursday to help you guys in terms of business, entrepreneurship, and just leadership to improve yourself, but also improve your business and improve your wallet, improve the money you make, improve your everything. So we're here to help you guys. Harry came on, brought his advice, brought his information on how he started, how you can grow, how you can get financing. I mean, he gave us all the information to start investing in your future. Hope you guys took notes like I did myself. And I was to definitely say one last time, thank you, Harry, for coming on our show. Guys, until next time, I'll see you at